Good afternoon. Thank you for joining us today. My name is David Talbot, and I'm Managing Director, Head of Research at Red Cloud Securities. I'm delighted to host a Red Cloud webinar on royalties today. We are going to hear from Empress Royalty Management, including Alexandra Woodyer-Sharon, President and CEO, and David Rhodes, Executive Chairman of the company. Now, during today's webinar, they will provide an overview and outlook. Then we will take some questions. You can type your questions into the chat box and we'll get to as many as we can. But before we kick things off, first we need to discuss the fine print. During the Empress Royalty webinar, forward-looking statements may be made. I would direct listeners to their forward-looking statements outlined on page 2 of the Empress corporate presentation, and that can be found on the company's website, empressroyalty.com. For Red Cloud Securities, I would highlight this webinar as for informational purposes only. It should not be considered a solicitation or recommendation to buy or sell securities. We note this call does not consider a particular situation or needs of investors, and participants should really rely on their own investigation and seek their own professional advice before investing. Please see our most recent research located on the Red Cloud website for specific disclosures on Empress. Now, before Alex and David step up, I'd like to say a few words about royalty companies. There are different types of royalty companies. They often serve different purposes as a means to alternative forms of financing. Origination financing, for example, that provides capital to help finance projects. And this is one of the preferred routes, or the preferred route, for Empress. Project generation model, they scour the globe for interesting projects to sell and keep a royalty. And then there's the third-party royalty purchase route as well. Now, royalty companies are somewhat unique. They generate fundamental value. Management teams and overhead are typically small. They're not spending money on exploration and development, and most royalty companies target solely precious metals. One thing to think about, time is money. They really do need to understand when projects are moving forward and the risks associated with their development. Now, royalty companies have tended to outperform most commodity-based benchmarks. Empress is a relatively new entrant into the royalty space, entering last year, and the royalty model is well established by companies such as Franco-Nevada, a company I worked with for 6.5 years, or Wheaton Precious Metals and others. Now, while majors in the space perform well or have performed well over the last 5 or 6 years, it's our view that new entrants tend to outperform, and smaller companies add royalties and streams that are often too small for the majors, but they can grow materially in cash to their own right. Grow its cash flow and revenue for their own right. Now, given its new interest status, we think that Empress is a similar re-rating potential. It has a desire to create new royalties and streams, and with the strategic alliances it has, it could provide access to unique investment opportunities. So with that, I'm going to turn it over to Alexandra to kick things off.
Thank you so much. Empress Royalty, a strategic approach to investing in gold and silver. We're listed on the TSXV under the symbol EMPR. Forward-looking statements. We will be making forward-looking statements throughout the presentation, so I encourage you to have a look at these. They're also available on our website. Empress creates new royalties and or streams to get projects into production or to expand upon production capacity. We currently have a diversified portfolio of 17 investments exclusive to precious metals. We're focused on quality over quantity. Currently generating revenue and forecasting over $26 million US of revenue over the next 3 years with our current investments. Management board have over 250 years of experience, $6 billion in mining finance transactions completed, providing us with a unique access to deal flow. And we're on the path to rapid growth. We're building a strong portfolio with a robust pipeline, looking at over $75 million of potential investments. What are royalties and streams? Where royalties are we invest in a company and we receive a percentage of revenue from production. A streaming agreement is where we invest in a company and we're able to buy a percentage of gold or silver at a discounted price. And at Empress, we do a combination of both of these investment vehicles. The investment benefits. For an Empress shareholder, you're getting leverage to the gold and silver price. You're getting access to a globally diversified portfolio of assets. You have limited exposure to capital and operating costs compared to typical mining companies. And it's scalable growth with low overhead. It's attractive to mining company partners because it's non-dilutive and a highly competitive cost of capital. It provided upfront capital by immediately monetizing part of its future production, and it's a lot less restrictive than typical bank financing. As David mentioned earlier, when we look at the royalty space, especially in the junior side of the market, there's sort of three types. There's the exploration generation, early stage, typically inexpensive to acquire, but there's the exploration risk. No guarantee it'll turn into a mine, and if it does, there's a long lead time to revenue generation. Then there's the trading acquisition companies buying third-party royalties. It's already in place, so it's a pretty simple acquisition, but it's become a crowded marketplace, paying a premium and part of a competing bid process. And there's also no relationship with the mining company or opportunity to negotiate those contracts. Empress, we're focused on the creation and origination. We work with mining companies to create new royalties or streams, and we have that direct relationship with the company. We've got flexible structures that work to fit the goals of all parties, and we're able to focus on producing assets, which brings revenue into Empress, creating value for our shareholders. Here we're looking at two charts on royalty growth. The first one is looking at the royalty index versus the gold price and the gold miners ETF. The second one is highlighting the life cycle of a royalty company. We're in stage one. We've just established market presence. We believe with our business strategy, with the investments that we're making, and with our team, we should be able to quickly accelerate to stage two, rapid growth. David, I'll hand over to you to chat about Endeavour Financial and the relationship with Empress.
Sure, thanks, Alex. So Endeavour Financial, we're one of the founding fathers of Empress. We saw a huge opportunity in the marketplace where as David Talbot said, a lot of the big streaming companies are getting bigger. Their asset size of what they're looking to invest is getting over the 100 million plus size. So we saw an opportunity for the smaller stream model. And this is why, as the founding fathers, we set up Empress. Our role here as Endeavour Financial, we are the investment manager. So we provide a huge amount of support, not only in the origination, identifying opportunities for the business, but also in structuring and negotiating the transactions and looking at the technical and cash flow modeling and financial analysis of the opportunities as well. So we provide a lot of the background and back office support, as well as obviously the front office support in identifying opportunities.
Thank you. So looking at our investment focus and criteria, we look at it from 6 different aspects. The project stage, we're looking at development and production stage projects. We're looking at company size. We're looking at small to mid-tier size companies, both public and private. Commodities, gold and silver. So we truly are a precious metals royalty and streaming company. We're looking globally. We've got investments right now in Mexico, Peru, and Mozambique, and we're continuing to look at other opportunities in Africa, South America, and globally. Our investment size, we're mandated from $500,000 to $25 million. The sweet spot for us is at 2 to 5 at the moment. And we also have a strong ESG focus as we make decisions on any of the investments that we're doing. Now jumping into our pipeline, we have 1 producing asset right now that's bringing revenue, 3 development stage assets, and 13 exploration assets in the portfolio. The first one I'd like to talk about is the Antapite mine in Peru, owned by the Sierra Sun Group. This mine was started in 2002 by Buenaventura, purchased by the Sierra Sun Group in 2016, over 1 million ounces produced to date. This investment for $10 million is helping them expand their production capacity from 750 tons per day to 1,000 tons per day. We structured this one as a gold stream, so we're getting 4.5% of their gold up to 11,000 ounces, and then there's a 1% life of mine stream. The economics for this for us is about $2.2 million US a year. The NAV is 14.9 million US. It's important to note throughout the presentation, we use $1,750 gold, $21 silver, and a 5% discount. Another investment we have is the Talahueto Silver Stream. This is a project owned by Altalay Mining, also listed on the TSXV in Durango, Mexico. This one's currently in construction and forecasting production this quarter. And this was a $5 million investment for us, which gives us up to 1.25 million ounces of silver. The annual cash flow is $3 million US to Empress. The NAV in this is about 24.8 million. So a great investment for us. The next development stage project we have is called Manica. This one's owned by MMP in Mozambique. This one's also in construction, forecasting production towards the end of this quarter, beginning of next. David, do you want to chat a little bit about this one?
Yeah, really, this one and the other one, if you don't mind, Alex. I mean, both the Tarawetto and Manica that you've seen, these are projects which are very close now to production. So we are able to get involved at an early stage in our due diligence process, but actually investing at a late stage in the development cycle. So Tarawetto was half built when we got involved last year, investing and putting the stream in place. And Manica's a similar opportunity where it was substantially built, and we invested the $2 million, as you can see on the screen. And within the next couple of months, both those assets should be in putting ore through the mill and getting into production. So both of these are very close to being cash flow producing for the company.
And I think they're good examples of the type of opportunities. We're also looking at the pipeline where we're able to identify these kind of opportunities to invest. We have the Pinos royalty in Zacatecas, Mexico, Oban Candelaria. This is a development stage project. It was $1.5 million investment for 1% royalty across the entire project. It's currently a 7-year mine life, but we have potential for mine extension. So we expect this one to get a lot more interesting as Candelaria works on this project. We also have 13 early stage exploration projects in Canada. Great to have in our portfolio, but we're much more focused on revenue generation. Here, to put some framework around this, $1,750 gold, $21 silver is the base case. The upside case is $1,900 gold and $25 silver. This is our forecasted revenue with Manica, Tarawetto, and Antapite. We're projecting $5 million US next year as a base case, 8.6 in 2023, and over $12 million in 2024. The other thing to highlight here is our total net asset value of our assets is $45 million US. We have invested $18.5 million to date, and our market cap is just at $23 million US. We trade at a significant discount on all key metrics. Here we're looking at the peer comparison. Just take the PNAV ratio. The average is about 1.35. We're at about 0.62 on the base case scenario. Board of directors, David is always in the call with me now. Thank you, David. Myself and Jeremy Bond from Terra Capital, another large shareholder and strategic partner, are all on the investment committee. Paul Mainwaring's a CFA from London. Wes Roberts, a mining engineer from Toronto. Natasha Caring, a mining finance lawyer. And David Lang is our technical advisor. And he's had over 30 years of experience as a mining engineer, building mines, operating mines. Great to have him join us this summer. Senior management, I'm based here in Vancouver. Rich is based in New York. He's our global vice president on deal sourcing and origination. We've got Caitlin in marketing, and then we're supported by strong corporate governance specialists. Capital structure. We've got over 100 million shares outstanding. Our market cap is about $29 million Canadian today. Our cash is $2 million US. We recently just signed and executed on the first portion of a credit facility with Nabari. It's an accordion facility up to $15 million, and we've drawn $4.8 million, which allowed us to complete the Antapite funding. So we're excited to have that in place, which gives us access to capital to make further investments. We have great research coverage by David, who's with us now, and also with research capital with Adam. Strategic partners, management board, institutional investors, and public float, roughly split a third between all groups. So what are the near-term catalysts for Empress? Where are we going? Antapite will be expanding their production from 750 tons to 1,000 tons per day this year. Tarawetto should be in production in Q1. Manica getting revenue in from them in Q2. So projecting over $26 million in revenue over the next 3 years. And we're going to continue to expand the portfolio and build the company. The investment case. So we have a diversified portfolio of 17 investments with a robust pipeline. We're investing $26 million over the next 3 years US in revenue. Value creation. We've got a net asset value of our assets of $45 million US. Our internal rate of return is 35.5%. And we're trading at a significant discount compared to all of our industry peers. Our market cap is $24 million US.
Yeah, and I think, Alex, just on this slide, if I can just say a few words. You mentioned earlier in the presentation about the different types of royalty companies, and obviously we're creating new royalties, and it takes longer. There's a negotiation with the company. There's our due diligence to be done, which is different to other style of royalty companies where they just buy them. And I think the key comparison is really the rates of return. When you're creating your own royalties, you're investing, you can make directly, you can negotiate and make a better return than if you're just buying a royalty, where you've got an open, usually a tender process, there's open bidding process, and it's more of a competitive situation. So we're pleased with what the returns are going to look like. We're now at that tipping point of where we will be generating significant cash flow over the next, this year and thereafter. And hopefully the shareholders will be able to reap the rewards of our hard labours and our continued hard labours as we keep investing and producing these returns.
No, absolutely. That brings us to the end.
Okay, great. Thank you very much, Alexandra and David. Great presentations. Nice and precise, succinct. So we're now going to get to the Q&A portion of the webinar. Reminder to everybody that they can put their questions into the chat box at any time, and we'll get to as many as we can. So I guess, why did Empress decide to go to the creation or origination route rather than, say, the third-party route?
David?
Yeah, I can take that one, Alex. I mean, purely for the returns. Returns, number one. Second one is actually the relationship with the companies and the information and the risk analysis you can do. So we are in the position where we just negotiate and do our due diligence directly with the mining company. So we undertake a thorough technical, financial, and obviously legal analysis and process when we look at investing the money. So we know everything about the company. We know the risks. We're able to do a full legal assessment. That's because we're creating something. We're actually creating the paper. We're creating the investment. If you're buying a piece of paper, usually you buy that document. You cannot negotiate it. The due diligence is usually very much a third-party desktop type due diligence.
You don't get
so we think for investors and for investing people's, the hard-earned money in the company, it's better to do that due diligence and have that reassurance of a full technical analysis and financial analysis rather than just buying a piece of paper where you really are a third party and not directly linked to that mining company.
And just to add to that as well, because we have the direct relationship to the company, not only to look at the project, but as you mentioned, overall the company itself and what its growth plans are, where it's going, where they're focused. So we know that they are focused on the asset we're investing in. We know what their long-term plans are. Sometimes we're part of a piece that's coming together to help that whole long-term plan. But we have a much better idea and relationship with them to know the future goals of the company, which ultimately helps protect our investment as well.
Yeah, but also I think and people talk about the royalty space being crowded, and that really, the crowded space is not on the origination side. We don't see a huge amount of competition in what we're doing. Maybe it's our relationships, maybe it's our style of negotiating or finding opportunities. But the really busy and competitive area is bidding for the existing royalties. For example, Newmont Mining's got 20 royalties. It can go out there, get an investment bank to do a massive process with all the royalty companies to bid up and obviously get a huge premium for those assets. And that's something we're not doing because we think there isn't the returns for our shareholders in paying a big premium for a package of investment in royalty and stream investments.
Right. Would you consider buying royalties from third parties if the opportunity arises?
Our focus is on their origination and creation.
Mm-hmm. Yeah. Okay. So very good. 17 investments right now. I guess how many of these are being paid in the next year or two? I guess you mentioned you've got I think 3 or 4 that are coming online fairly short order.
Yeah, so we've got receiving revenue right now from Antapite, that mine's in production. We'll be expected to receive revenue from Talahueto towards the end of this quarter and Manica at the beginning of next. So 3 of them should be online very soon. And then that's obviously where our revenue projections that we put forward for $5 million US this year is coming from.
Right. And with more production coming on stream, would you envision having to sink more capital into upcoming financings or your next source or your next, let's say, set of projects?
Not sure I quite understand the question, but in terms of how we're going to be funding future opportunities.
Let me say it this way. You're focusing on fairly small companies right now with a let's say $2 to $5 million investment. Would you be increasing that as you go forward and start creating revenue for the company?
Yes, we are going to be expanding the portfolio out. The investment, we're mandated to look at anything from $500,000 to $25 million. The sweet spot's sort of 2 to 5 for us at the moment. But as we grow the company out, that will slightly increase into sort of the 10 game like we did with Sarah Antapite, maybe a little bit larger than that. But it's just the organic growth that's going to happen. We have revenue starting to come in a meaningful way, which we can deploy into other investments. And we also have the facility with Nabari now up to $15 million, which we've only drawn just over 4.5. So we have access to capital to put into smart investments and can continue to build Empress.
Yeah, and it's worth saying Nabari, obviously, part of putting that facility in place is give us another funding source. It is our first facility, so we are a new company, first facility. Obviously, as our portfolio grows, we'll be looking to refinance it, looking obviously for cheaper funding. But as you know, in all walks of life, you need a credit rating. So that gives us our first bit of credit rating. As we grow, we'll be able to refinance and get cheaper financing, which is the medium-term plan here.
Right. And how many more royalties do you think you can create on an annual basis? Are we talking maybe 2 or 3?
That's a great question. I mean, it depends on the size of them. It depends on the diversification. The process itself, it takes, if a company has everything lined up and we're able to get to site and no COVID delays, it's about a 2-month process, 3-month process to put one of these in place. So yeah, you could be doing 2 or 3 or 4. If we've got more capital, we could be doing more. Mm-hmm. It's finding the right ones that not only make the right economic sense to us, but fit the risk profile, and that we are comfortable with everything with how they're operating, how they're planning on building. All of the environmental and social components go into that as well, and really making sure the investment makes sense for multiple aspects.
Yeah, we're fairly good at going through, obviously, as you heard, a good pipeline, and that's really going through quite a good due diligence process at the moment to cut out the ones that we think are not worth the effort and the time. As Alex says, probably 2 months is about the right time frame from start to finish with all the due diligence. And that's after we've filtered out the ones that don't fit either our strategy or just we know aren't going to be suitable for the investment.
Great. Okay. Thank you. Most royalty companies are geared to precious metals. Have you ever looked at something else? Looked outside the precious metal sphere? For example, cobalt or lithium projects are very much needed and in need of cash. Have you looked at anything else?
No, Empress is a true precious metals royalty and streaming company. We are only looking at gold and silver investments.
In that case, would you invest in gold streams or silver streams from base metal companies?
Yes, exactly. So something where we can get a byproduct is a great opportunity, where it's not taking what the company's upside is, but allows us to get silver, for example, Talaweto, when it's a multiple mineral project.
Right. Okay. And you also talked about your global outreach. Do you have any preferred jurisdictions? Are you maybe looking at projects in North America, say Newfoundland or Australia as well?
We are looking at one in Australia at the moment. Our focus is on, again, good projects. I think we're able to get some great returns by going into Africa and South America compared to some of the ones which are a little bit more expensive or less of a return in the North American ones. It really comes down to going into countries we've been before, and with the experience of Endeavour Financial brings and within their network, we're going into mining-friendly jurisdictions. And perhaps, David, you want to expand on a bit more from with the Endeavour hat?
Yeah, I think so. I mean, we are driven, obviously, as Alex rightly says, good projects, ones we're able to view and as investment on a sensible jurisdiction. Most of the assets we're looking at are producing, so it's really expanding. So we've got the comfort on that side of things as well. So that is the key criteria. Country-wise, we're fortunate. We've been, in mining over 30 years as a business. We've been to a lot of exotic places. A lot of places aren't so exotic. If we've been in a country and we're comfortable with the legal regime, the mining expertise, and we feel it's a good investment put forward to the company, we will. So there'll be some countries that people may, like Mozambique, question. Well, there's $17 billion going to Mozambique from the world funding organizations for the LNG there. So that's changed completely. So we assessed that risk and made sure it's worthwhile. Peru, we looked at Peru when they had the presidential elections. We made an assessment, and as we expected, it's calmed down to a fair degree. And there's been, the type of asset we're looking at is a good privately run Peruvian company, which is exactly what the president wants to promote in that country. So that worked out well, and that's part of our assessment. So we will look at some countries that a lot of our competitors may not look at, purely because we can assess the risk and we have that expertise in that environment. And as Alex rightly said, if you can manage the risk, then you can get a better return for shareholders, which is what our key focus is here.
Okay. So as far as diversification goes, what's your sort of strategy? Do you plan to split evenly gold, silver, and then I guess you did talk a little bit about diversification globally a second ago.
Yeah, we're going to continue to keep that balance as different opportunities come forward, creating that diversification. We love silver. It's just a little bit harder to find the silver opportunities. Obviously, we've got quite a bit of silver coming in through Talavera, which is great. We'll continue to look for opportunities like that. There'll be a balance between the gold and silver, but it's finding the right investments with the right returns while keeping in mind the diversification.
Okay, great. Maybe focusing a little bit on Sierra Antapite for a second. That's a private company. Do you find that there's a little bit more due diligence required when dealing with privates? Not an awful lot of news is out there in the public. How did you come across this opportunity?
This came through our network, through our network and through our connections, the relationship with this company. And, the group, the Sierra Antapite group, had been around for over 20 years operating in Peru. They were mining contractors, building mines for other people, and said, we're building for everybody else. Why aren't we building ourselves? And that's when they picked up Sierra Antapite and another mine as well, and some other concessions. They've actually got quite a few things happening down there. When we go through the due diligence process, you're right, we don't have access to all their CEDAR filings. So we go through a lengthy, obviously the technical is very similar, but we go through a very lengthy review of all their legal documents, all of their financial statements in country, and really get comfortable with it that way. So there is a very vigorous process that we go through. There's also a very strong reporting that goes on from once we make the investment. So there's not only monthly and quarterly and annually detailed reports that they have to deliver to us. We have weekly calls with these management groups. We're very involved with them. We know what's happening with our investment. We, have excellent relationships with them.
Yeah, and I think, Alex, that's an important distinction. And I think we mentioned it before. If you're buying a piece of paper, not a royalty, often that doesn't have the type of information and covenants and structuring that we put in place. Because we're negotiating and actually structuring these transactions, we can put in that information flow. We can put in that annual, monthly reporting. We can put in certain structures which secure the investment. Yeah. Which you can't do if you're just buying a bit of paper. I think that's, for example, a lot of the transactions you've seen, we actually may, in most cases, have security over assets, which protect us in the worst case position, which you obviously don't expect to happen, but you never know. This is mining, this is life. But we have those structures where if you're not obviously creating a royalty, you won't have that in most of the streams and royalties that you're buying in the marketplace.
So yeah, it's really de-risk these investments with the way that we're structuring them and the extensive due diligence that we do.
Okay, so it would be normal practice for you to have weekly or monthly meetings with these companies, although that's not typical of the sector, I'd say.
Well, you got to remember the stage you're in as well. Developing assets, we've invested the company's money. We want to protect that. One way to do that is to make sure on a weekly, in certain circumstances, depending on how their profile, if they're in development mode, obviously once they're in full production, then we can pull back on the amount of reporting they need to do. But we have that full availability in our negotiations and our documentation to be able to get our hands dirty, so to speak, if we need to.
Mm-hmm. Yeah. Okay, great. Thank you. In your January presentation, the Antapite stream showed an IRR of 17%, whereas Tahueto stream showed an IRR of 79%. So could you maybe walk us through your decision-making process, deciding, which projects to go to, considering there is such a wide difference between a couple of these?
Yeah,
if you look at, sorry, David, go.
Oh, no, I was just going to say, I think part of that is the risk profile. So Sarah Antapite's existing producing asset being ramped up. So a lot of the technical risks of, can it produce gold, met testing, mining, all that has been de-risked. And that's why there is a lower, IRR on that. The Tahueto mine, it was half built. It was a riskier transaction for us to invest money in, and therefore the higher return was gained because of that. So really the different returns reflect the different risk profiles at that time. Tahueto, as you can see now, is only a short period away from being in production. So obviously that makes that return look much more substantial. But at the time it was, this was a year ago, roughly about a year ago, when we looked at it, it was a different risk profile. So, a year, it seems when you think about it, that huge return just for a year of investment, but that was the opportunity at the time we were able to negotiate.
Right. And that's a pretty much set investment, right? Do you have any potential to share in the upside at Tahueto?
Sorry, David, I didn't hear that.
Sorry, do you have much potential to share in the upside at Tahueto? That's pretty much fixed investment, right? It's got a time period.
Yeah, this one is so we're getting 100% of their silver up to 1.25 million ounces. We're buying at 20% prop price. So that is a cap one, but I mean, the amazing returns we're getting on that, obviously 79%, the NAV, and that's 24.8 million. So it's a fantastic investment as it is.
Okay, great. Moving on to Manica, could you maybe give us a little bit of color on the geopolitical situation in Mozambique? You mentioned a second ago there was a lot of foreign investment going in the country, and then maybe touch a little bit on the project as well. The production date looks like it's been pushed back again. So.
Yes, that's a fair point. So, politically, there's two aspects. I mean, the investment's gone into the country for the LNG, and there's been a huge amount of legal and financial re-regulation of the country because of that. So, financially and also legally, the whole country's stabilized, which we're very happy with. The key for us is where the asset is located. So the asset is located on the middle west side of Mozambique, and that's very close to Zambia. The Zimbabwe gold belt and the border there. So it's in a very good localized area of gold mining. So we've got all the facilities in the Zimbabwe side as well. So well located. The only bit of civil strife that you see in the country is miles away to the north. Nowhere near the gold belt we're talking about, inspectors to Zimbabwe being our nearest neighbor, which is fine in Mozambique. So generally, from the way we looked at the risk profile, an improving position in Mozambique, which is why we invested and recommended, obviously, to the board to invest in the asset. Anything more on that, David?
No, I think we're good there. So maybe moving on to banking relationships. Now, you do seem relatively unconcerned about the insolvency of Ascendo Banco, and this reader is not too concerned about that either. However, is the market showing any concern? Can you maybe comment a little bit on that and how that's impacted you in the short term, and would it impact you in the longer term?
Yeah, I mean, Ascendo Banco lost their banking license was it late September, early October. And at that point, we had discussions about doing a debt facility with them. We were able to pivot, and we're now working with Nabari. And that turned out to be excellent for us because it wasn't just a set amount of a facility. We now have this accordion feature, which really allows us to grow Empress. I think we've demonstrated that by the end of this, we were able to get the facility completed last year and complete Sarah Antapite's as well. And we still have very obviously strong partnership with Endeavour Financial, being our investment manager, and Terra Capital out of Australia. And we've got the origination side is still very strong in terms of we're looking at our pipeline. So I think we are well positioned for some serious growth happening next year.
Mm-hmm. Okay. And that Ascendo Banco issue has also impacted the Pinos royalty a little bit, I would imagine. That slowed project development there?
A little bit, yes. I think they're now in discussions. We'll have to look at the press release, but they're in discussions with project financing groups at the moment to advance that project. The impact for us in terms of Pinos, it's a very small amount of revenue. The real upside there is going to be when they get out there and they develop that project further. It's 1 vein out of 7, so that one's going to get a lot more interesting down the road.
Okay. Would you consider any M&A activity with existing royalty companies?
Part of our scope of work for Endeavour Financial, they only advise us on the debt, but they've also advised us for M&A. So, David, perhaps I can turn to you on that, or just leave it there.
Yeah, well, always on the lookout. It's part of our corporate strategy. The business is growing it, and obviously there's 2 ways to grow it. One is of what we're doing now, which is creating royalties. I think we're, as you've seen, totally undervalued. So it has to be a hell of a premium. But from our side, as we develop the portfolio, as we grow, and there may be an opportunity in the future.
Mm-hmm. Okay. Do have a couple more questions back to sort of your strategy as far as a royalty generation goes. You're active in various jurisdictions. North America, often royalties attach permanently to the assets, but in Latin America, royalties often originate from transactions, but can be preserved over time. Are you amenable at acquiring royalties in all Latin American jurisdictions?
In terms of structuring in Latin America, it's a little bit different. For example, when we went into Peru, we were going to be doing a stream and then a royalty on Sarah Antapite. But the way it's structured there, it makes more sense to do a stream and then it drops down to a life of mine stream. So everything's very bespoke that we're doing depending on the country, the rules, the regulations, and how it works. In terms of where we're looking at South America, we're going into mining-friendly jurisdictions once it makes sense where we've been before.
I think maybe a bit of the question was, would we buy royalties that had already been put in place because of an event that happened? And obviously we are creating them. So we're talking to companies to expand production, or to put a mine into production. So, we're not going to acquire those types of assets, those types of royalties and streams that have been put in place already. So we are just creation side of it.
Okay. And we talked a little bit about diversification of commodities, so being precious metals focused. So
only precious metals. Only precious metals.
PGMs fall into the precious metals. Copper and nickel would not.
Correct. Yeah. Okay. That's right. Correct. Yeah.
Great. Okay. The revenue, you mentioned 26 million over the next 3 years. Are you hedged, or do you plan to take delivery of gold and sell it at later dates, or are these really just financial transactions? Take payment.
We're taking the payment now. I think that's something we develop at the investment committee level of our long-term view. We've got ones that'll be bringing in cash, like Manica. We'll be getting silver from Talahueto, and then we'll see gold from Sarah Antapite.
Okay. And is there any potential for organic revenue growth at the existing royalties or streams, or really is the growth planned for coming from creation of further royalties?
It's definitely focused on the creation coming from further royalties, and these royalty and streams we've made to date are there. But if you look at something like the Pinos royalty, that one definitely has some organic growth in it, as well as our exploration portfolio. We are much more focused on revenue, but there's definitely some organic growth built into that. The same with Sarah Antapite, that's at 1% stream for life. So as they expand that project out as well.
Okay. And now Empress is a relatively new company, and cash flow is just starting to come. How do you attribute the discount the market's giving to the company at this point?
We had a clear strategy. We took the company from 13 exploration assets. We've brought in 3 development stage assets. 2 of those will be in production within the next 6 months. We've got 1 producing asset. We've deployed the capital wisely, and the market hopefully will catch up now. We've got the Nabari facility to be able to quickly react to other opportunities we're seeing. We've delivered on everything we've said. If you look at just the numbers themselves, invested $18.5 million to date. We've got a net asset value of $45 million. Our market cap is $23 million US. So significantly undervalued.
Great.
Great. And I think one of the main reasons is, like any new company, you got to show what you can do. And we're very close to showing that our investments will be producing cash flow. And maybe people are going, oh, I'll wait till I see the proof, wait to see how well they've done. So, I think it's, months away now, and the proof will be of this good, sound strategy, as Alex said, producing cash flow. You've seen the numbers coming out. Once you see that, then there's proof is in the pudding, and hopefully that will reduce that large discount that we're seeing in the marketplace, which in our view is unfounded, but maybe that's what people need to see. Actually the money coming in each month.
Okay. Have you considered any opportunity for dividends for shareholders in the future? And if so, maybe what sort of revenue might you be expecting?
Yeah, this is very much something that I am, as one of the members of the investment board, is keen upon. Making mining and royalty companies very much a yielding asset class for investors. So as soon as we've got our portfolio built up, and we've got the revenue coming in, then we'll be looking at putting a dividend policy in place.
Mm-hmm. Okay, and I think we're pretty much out of questions. Maybe one last one here that came in. One of the appeals of investing in royalty companies is the low overhead, right? You seem to have a corporate secretary and assistant corporate secretary. Could you maybe explain your business model from a staffing standpoint, and maybe a bit of the relationship with Endeavor as well?
Yeah, no, we've got a very lean team in terms of full-time employees. Most of it is, with the mentioning of the corporate governance group, that's a service group that we use. They're not full-time. And in terms of our monthly burn rate and our G&A is about $1 million a year. So we really are keeping it tight in terms of what we're doing. And we're really able to punch above our weight as such a small company with the relationship with Endeavor Financial. I mean, they've got over 30 years of experience. They're experts in the sector, and they're able to apply that knowledge from the larger side of the financing market to the smaller side at Empress. So we're able to keep our overhead very low while having a very big impact with a great group of people.
Mm-hmm. Perfect. Okay. Well, thank you very much. Let's leave it there. So thank you, Alexandra and David, for speaking to us today. Thank you for everybody else tuning in. A reminder that Red Cloud Securities will be back on Tuesday afternoon. That's when Cody Kushner is going to sit down with EnviroGold Global. That's January 18th at 2 p.m. Eastern. So have a great day, everyone. Thank you very much.
Thank you so much.
Thank you, and thank you for the questions.
Thank you.
Day.
Bye-bye.
Thank you.